G'day folks, welcome back to Pete's Investing. It's March 19, 2024. This is the gold technical analysis. Now we're in a bullish trend, although there has been a bit of a retrace with a divergence that's been hit. So we'll look at that in more detail. Also, we're introducing a new table every week or every video, and that covers all these instruments, including some Forex. So it shows you here, for example, on the gold price, it's bullish on the monthly and weekly, although it's broken down into a bearish outlook on the daily. So we'll have a look at that in more detail. So what I've got here is the weekly, the daily, and the hourly. And on the weekly, first off, on the ADX 25, it's bullish. The daily ADX is also bullish. And on the hourly, you can see it's a fresh break to the upside on the bearish. So that's, you can obviously tell that way. With the CCI 150, it's broken outside of this band of moving averages, and that band of moving averages is available in the description below for the video if you want to learn how to paint that or draw that. But when it's above the band, it's bullish, and when it's below the band, it's bearish. You can see here on the weekly, it's bullish. On the daily, it's a fresh breakout to the downside, so it's bearish. And on the hourly, obviously, it's been declining for some time. Now, on the weekly price chart, you can see there it's sort of been in a range for some months now, but longer term, for a number of years, it's been bouncing off this diagonal ascending trend line until it finally hit this resistance at 21.95, and we may see a bit of a retrace to the downside on the weekly. On the daily, there was a Fibonacci expansion drawn here, and it hit up there as far as just above the 61% level, which coincides with this 21.95 resistance, and again is a bit of a retrace to the downside as it's a support level there at 1984 minus support. And on the hourly, we did have this bearish divergence on the CCI that's still declining versus higher highs on the price, and now the price is pulled back. Before our last video, that little wick there touched that target area between a 23 and a 38% level, and since then it's been fluctuating up and down, and it's actually broken a bit lower. As a trading idea, I've got this daily chart here, and again, we only trade long when the CCI is above the moving average bands, so you would have started trading long from that point there. You can see on the two charts on the right, the one in the middle here is the average down approach, the 1 hour chart, and this is the stop loss 1 hour chart. So you would have taken long trades from that point when the CCI broke above the moving average bands, and you would have closed out the trades when it broke inside that moving average bands in there. So you can see there overall, the average down approach has generated $122, and a stop loss approach has generated $11 on that strategy. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.